Welcome to the Black Appalachian Coalition's podcast entitled Black Remembering, where we will bring to you the heavy and the hope across the Ohio River Valley. We want to remember who we are, where we've come from. We want to speak to the oral history of what we've done, what we've achieved. We want to speak to the ills that we have experienced while also finding solutions to those problems, those issues. We want to deal with the narrative that has kept us deeply rooted in despair. Now we want to punch through that narrative and stand up and say, we are remembering our Black past, and we are rooted, and we are here to stay. Welcome to Black Remembering. We hope that you find your place, your space, and your voice in this podcast.
Welcome back to our Tea on Taxes series. We have with us President Patryce Rispress of PAK Accounting. And this is going to be a more informative info session style of an episode for our Tea on Taxes series. I have about 10 questions to ask our tax expert, and we're going to hear all of this advice and knowledge and the good word. Please go ahead and if you're driving, hit pause. Make sure you come back to this later. If you're sitting down, please have a notebook and a pen or however you like to take notes. But please be ready to take notes and create some action steps out of this episode. So my first question for you, what's the connection between your hiring paperwork and your taxes?
There really isn't a connection. They're two different situations. A hiring paperwork is for someone who's going to be coming into my organization. It does give the same data as the tax paperwork, but there's different questions on each one, right? So I would say they're very different.
So would you say it's typically a good idea to consult both your HR and your tax expert rather than taking one's word for the other?
Yes.
Got you. Thank you. What is the difference, if there is a difference, between W-2s, W-4s, and 1099?
So 1099s are for people who are not employees. They usually have a business, 9 times out of 10, or they might be a sole proprietor, which means they do not have an EIN. They operate under their social security number. They are not privy to have benefits. They don't have to clock in and be shown up somewhere at a specific time. 9 times out of 10, construction industry is a little different, but they're given a contract to do their job. It says, hey, you are to be contracted with this particular, organization to do X, Y, and Z. Your term is a year, 6 months, or whatever it is, and you're given a certain amount. So the Department of Labor has a clear distinction of what a contractor is. So I'm sure you guys can definitely, if you want to drill more into that, you can read on their website about that. A W-4 is a withholding. That is to determine how much taxes to be withheld from your paycheck. That is something that you are allowed to change more than once a year. That's the form that you're getting in, is saying, can anyone claim you? Do you have any dependents? Do you have any other jobs? And you're filling in whatever the prompts are saying. It'll say, hey, if you have another job and you work, I don't know, X amount of hours, put $1,000. If no one else can claim you, put $1,000, and you're adding and you're filling that out. That is something where you're going to have to definitely talk to your tax professional to make sure that you're filling it out correctly, because it can definitely have an adverse effect on if you're going to be paying taxes at the end of the year or you're going to be receiving taxes back at the end of the year. So that can have an adverse effect. A W-2 employee, they're a person that is employed by an organization that they have an employment contract. They have a set amount of hours that they have to show up. They have a set amount of time, and they're going to get paid a certain amount. That W-2 employee the employer is responsible for withholding their taxes and reporting it to the IRS and their state agencies. Whereas I didn't say this, with a 1099, the persons they have a contract with, they are not responsible for submitting those taxes. You, the individual, is are responsible. So yeah, 1099, you're responsible for your own taxes. W-2, the employer is responsible for your taxes.
I'm making mental notes for what I need to do. Can we only pay taxes at the beginning of the year?
Nope, you do not have to be paying taxes at the beginning of the year. You have the ability to do estimated taxes. That's something that you would do with tax planning. What that amount is, you have IRS has a schedule that you could pay every quarter at the beginning of the next quarter. So January, February, March, you will be paying in April for that quarter. And they have a certain time frame that you are supposed to be submitting those estimated taxes.
So that makes it not as much of a burden on you at the beginning of one year if you're just breaking it down throughout the year.
Correct. And in lieu of doing estimated taxes, you also have the ability of that little W-4 form that we talked about. You can have the ability to say, hey, please withhold an additional $20 every pay period. So that's another way that you can also pay into your taxes for the year. So you don't have to do those four payments a year. You can break it down and put it in, if you get paid every 2 weeks, you can say, take an additional $20 out my pay to pay towards my taxes. And so now essentially now you're having $20 every pay period that's coming out as well. So you have both ways that you can do it.
What is a tax plan?
A tax plan, for lack of using a dictionary, basically is to come up with a plan of how to reduce the taxes that an individual is paying at the beginning of the next year, um, which will involve a person looking at the entire your entire tax situation. How many children you have? Do you have any credits? Are you in school? Are you married? Do you have any deductions? Do you have any IRAs or any other type of retirement or rental homes or things like that? So a tax plan is really going to look at every aspect of your life, even down to your budget and how you're spending your money, to be able to determine the best recourse that you have to go about to make sure that you are able to get what it is that you are desiring to get, whether that may be to reduce the taxes or to get a refund back.
What are some potential write-offs that most people are unaware of?
So I would say for business, there's tons, right? Renting a building is a write-off. You have the ability to, if you work out your home and you work for yourself, and let's say you're working at home, you have the ability to write off that potential room that you're working out of, a percentage, of course. IRS has put a cap on what the square feet can be. So you're able to write off a percentage of your home that you may use for work. Even if you have made a room that's solely dedicated to your business, you're able to write off things as painting it, doing any kind of construction or anything to get it a uplift for you to do your work in your business. So you're able to do that. Uniforms is something big that people don't write off that we see a lot of in business. There's, like I said, there's tons of different things that people aren't aware that they can write off when it comes to business. When it comes to personal, one thing that people can write off is these electric cars. I know that is said to be going away. Another thing is energy efficiency. Your windows, when you get new windows, make sure you can get a form and they can give that. And so you can do that as a tax write-off. Depending on what state you live in, there's certain things for buying a home, certain credits that you can get. Also, like we were talking about the energy efficiency, if you get hot water heaters, if it's made a certain way, or HVAC system, you're able to get a credit for some of those things. And like I said, it depends on like how it's made, or like I said, they're really big on that energy efficiency things.
I had no idea about the working from home aspect of it. That is so cool. Most people I know are holding down at least two jobs at a time. And with the possibilities of the internet, a lot of folks are starting their own small businesses, doing hair, nails, lashes, offering freelance writing services, driving through rideshare, or making deliveries, Instacart, Uber, all the things. So, since this is the age of the side hustle, what advice would you give to those of us who are holding down a side hustle?
I would say when you're doing a side hustle, make sure that it's not a hobby. The IRS gives you the ability to basically figure it out. I'm gonna say, for the lack of better words, and say, hey, for 5 years, if you keep having a loss on something, then this is really a hobby and you can't use it anymore. So if you're gonna legitimize your side hustle, make sure that it's a good side hustle and make sure that you're keeping track of your expenses, making sure that you're organized. Figure out whatever it is that you need to get organized, because it can be a tax write-off. It can be an expense. There's tons and tons of different types of accounting systems, QuickBooks Ways, FreshBooks. A lot of, I think even Credit Karma has something. Like there's multiple things, whatever works for you. You might be old school, you might want to use an Excel. Even when dealing in business, make sure use your a card, use your debit card, or now we got Cash App cards, Venmo cards, whatever. Make sure that there is a paper trail of whatever that you do. I know, some people like to deal in cash, but it's really difficult to trace cash, unless you have something written and have a receipt for everything that you're doing. If you were ever to get audited, you always need to keep that in the back of your mind. If I were to get audited, do I have a paper trail of what I'm saying that I spent? It's Russian roulette, to get audited. You want to, of course, no one wants to get audited, but sometimes it can happen. Just you can just be picked. But if it comes to that, could you furnish the information to show that those expenses are legitimate?
Thank you. I appreciate especially the cash mentions. I know so many people who don't trust banks, understandably. Like there's an argument for that.
Mm-hmm.
But also having that paper trail is really helpful. I think it's safe to say that most folks start thinking about taxes at the beginning of the year or at the end of the previous year. When do you think is the best time to start thinking about our taxes?
At my firm, we kind of do it like a quarterly thing. We really start pushing it at 6 months, so June. We'll sit here and start sending stuff out, because now is the time that we already should have did a tax plan, but we'll go and look and say, well, hey, this person isn't on track with the tax plan, whether it means to go purchase other assets or things like that, or to put yourself on payroll or things like that. So I think it's important to first have a tax plan and then make sure that it's going to be implemented throughout the year. Don't wait till the last minute, because we see that a lot on December 1st. What can I buy? What can I buy to bring down my tax liability? What kind of asset can I get so I can use that depreciation? You don't want to wait till the last minute, because sometimes you really will be pushing it. So I think it's important to talk, and just try to have a plan in place and try to get it implemented throughout the year.
Thank you. So when we're outside in the throes of the 4th of July or Juneteenth, we should start thinking about what the rest of our year is going to look like and thinking about tax planning.
Right. Like we talked about that W-4, maybe your company does a wide increase in people's salaries when people are getting their bonuses or things like that. Um, Maybe I need to change my W-4 at that time. Some people get theirs around the holidays. Does that mean I need to change my W-4 at that time? So definitely you already know these things, when you're interviewing for a job, ask when do they potentially give out their bonuses or their raises so that you can also potentially plan and see what those percentages are. Are they 5%? Is it 3%? Because some of that is not going to have an effect on your taxes. But if you do like profit sharing or something through your company, and you've been there for a while, some of those bonuses can be pretty hefty and they are going to be taxed. So you definitely want to make sure that you are prepared and plan for that. So long as you know all that stuff ahead of time and ask those questions, then you can go back to your tax professional and say, hey, I get bonuses in July and December. And I know in December I'm part of this profit sharing, I get 10,000, whatever it's going to be, 10,000, 15,000, 3,000. Will that make an effect on my taxes at the end of the year? So that's what I mean by planning and things like that.
So what advice do you live by when it comes to your own taxes?
It depends what I'm going to be doing. I like to give myself goals. So I will say, hey, for this year, I might want to purchase a house or investment property. How am I going to get that property? Am I going to be buying it through the bank, which means I'm going to be going, or I'm going to be using something else? So it kind of depends what I'm doing or what my plan is to do. I definitely have a accounting system that I use to keep up with my own books. Some people do that for their personal and for their business. I don't do it every month like I do with other people, some of my other clients, but I stay on top of it for the most part. Um, I'm a big believer in, like I said, keeping receipts and making sure I have documentation, make sure that my business account is only for my business and my personal account is only for my personal. Does it happen that sometimes I might swipe the wrong card? Absolutely. We're human. If I got two blue cards, one is business, one is personal, and I'm not paying attention, I do that. I think it's just making sure that you're organized. I try to make sure that I know if I'm going somewhere not to take certain cards with me, especially if I know I'm going to do certain things or use certain cards for certain things. So I don't carry all my cards with me. So what I say to others, I try to practice as well.
We have company cards, and I have mine locked away in the closet because like I rarely need it, but I do. I have a fear of running into that same issue of like taking it out and accidentally using it. So thank you for that. Um, I'm going to switch this next question up and ask instead for people who like me don't know anything about taxes, wouldn't know what to ask when you go to meet with a tax expert, what are 2 to 3 questions you think we should all come equipped with when we meet with a tax expert?
That's a good question. I think when you meet with a tax expert, I believe one thing you need to ask is their knowledge, right? How long have you been doing this? And what type of, taxes have you prepared? And have them give you scenarios about different tax issues that they run in and how did they not necessarily fix it, but how did they get through the process and explain it? So I think that's one question. Just see their experience. That's huge. Secondly, I think another question that you should ask is bring your other, previous tax return with you and find a question on there or a form that you may not understand and then have them explain to you what that form is for and ask, different tax professionals. And I'm a big believer in three, right? Ask three different people to hear what three different answers are going to be. I don't think you should always necessarily go with the first person unless they're referred. If you're out there looking and you don't know where to start, then you're going to have to interview three different people. But if someone's referring you and you trust them, that's a different story. So I do think that is one thing. Whatever you don't understand on one of your taxes, find the form and see how that person explains it. And the third thing is ask them, can they, if you have a question throughout the year, can they reach out to you? Some people see their tax professionals one time a year, and that's it. So, do you have the ability when you start a new job or you get a raise or a bonus, can you call them up and just ask them that question? Are they going to charge extra for that or is that included? So I think that's another thing because a tax professional should not be someone that you talk to once a year because we all get money throughout the year. So I think it should be something that maybe you should have a meeting with them maybe quarterly or maybe, at least more than once a year.
I will not name the experts that I went to last year, but I will say that I tried to go back and ask questions and the office was empty. So having someone you trust, I think is really important. And listening to those referrals. And also in the listening session, they mentioned kind of like feeling like they didn't really have much choice. Like you just hand all this information over to a stranger and then that's it. So I really appreciate you saying like interview that person, like ask different people and make your decision from there. We have that choice, we have that autonomy.
You're right. We have our H&R Blocks and we have our Jackson Hewitts and whatever you have our tax places that you hear about during the tax season. You hear those and you go there. And then throughout the year, there's nobody to ask a question. And people, that's what they see. That's what you're seeing on your phone, on your social media. You're also seeing that on commercials while you're watching TV. And so it's embedded in you. So you're going to go to a H&R Block. But go on Google, go and look at tax professionals or organizations that's in your area and read their Google reviews and reach out to them, and make sure another distinguished thing that you can do is looking and see like what type of firm are they? Are they just a tax service firm? Because then that's going to let you know that they're only open during that time during the tax season, which is usually December, was when they start, maybe January, and then coming into maybe May. And usually that's it. So now from June all the way to November, you have nobody to talk to. So I think looking to make sure that when you are dealing with a tax professional, that to see make sure that they do more than just taxes, because then that's going to let you know that they're open year round and also, they're going to be able to help you and assist you with questions throughout the year or even things that you may not even think about because they are apt to have more than one service.
Should our audience desire to contact y'all, which I hope that y'all do because this is some sage advice, how would they get in touch with PAK Accounting? Are y'all currently available for consultations? And what's the best way to book?
Yes, we are available for consultations. We offer the first consultation free. And I probably shouldn't say that because it seems like more consultations are free because sometimes people are like, hey, I got follow up. I might want to bring my husband on the phone. So we have a Calendly link that we do for consultations, and it's just calendly.com/PAC accounting, PAK accounting. You also can visit our website, pakaccountingusa.com. There's also a contact us up there. You can schedule a consultation. You can also reach out to our office and schedule a consultation that way. Our number is 919-424-6084. And you could definitely, we're on all social media platforms, PAK Accounting. So you can definitely reach out to us from there as well.
Thank you so much. Thank y'all for tuning in. We will include this information in our show notes as well. And until then, see y'all on our next episode of the Tea on Taxes. Thank you so much. Peace and blessings, y'all.